Hello traders, so it's your boy Lax and I'm going to take you through gold for the coming week, the weekly outlook on gold. And normally I start with the weekly time frame. So on the weekly time frame I normally look for liquidity sweep, that is number one. Liquidity sweep number one. Number two, premium and discount, PDRX, then the drawn liquidity. Those three very important things. So as you can see, for at the weekly time frame, gold has been bullish, and if you look for the past few weeks, it has also been bullish. You can see this is from October. It has been bullish. From 6th October, it has been bullish. So if you look in last week, gold, the last week candle cleared the liquidity of the previous week, okay, and then it gave us a bearish candle, right? So it means there is a high probability of gold creating another bearish candle this week for a pullback, okay? Maybe the pullback can be up to this fair value gap, okay? So let's go to daily time frame and let's see. So on the daily time frame, as you can see, we had a liquidity here which was cleared, buy side liquidity, and if you look keenly, there was a fair value gap that gold traded into here, okay? Now normally this can mean that we can continue with a bullish trend after it has mitigated that fair value gap. Then we can start looking for an opportunity to trade to clear this ERL, right, this external range liquidity. So let's go to 4 hours time frame. 4 hour time frame. Now if you go to 4 hours time frame, there is something surprising here. Now if you look, gold cleared liquidity here, okay? After that, it cleared another liquidity here, okay? Are you with me? Now, if you take your gun box tool, if you measure, you will find out that gold came to balance this swing, right? This pullback. If we can refine this fair value gap to the 4 hour time frame. Now if you can see, gold gave the pullback to the discount zone, and at this time, as you can see, gold is trying to react from this fair value gap, okay? Now let's forget about that. Before we forget about that, gold, as you can see, gold can go ahead and create another all-time high by clearing that liquidity, right? But remember, if you look keenly on the 4 hour time frame, the immediate structure tells us that gold has shifted bearish, right? Which means by clearing this sell side liquidity, gold already shifted bearish from that point, okay? Now gold having been shifted bearish, it means we can start looking for a selling opportunity on gold from next week. Now, so if you take your gun box tool again, measure the swing, you will find out now there is a fair value gap lying exactly on top of the equilibrium zone, which means if you are buying gold, you can use that as your target, okay, for the buyers, because gold having reacted from this zone, it only signifies buys, okay? Now there is another fair value gap up there, right? There's another fair value gap up there, which means for the buyers, we can buy gold up to the premium zone, then we sell to this fair value gap, this weekly fair value gap, okay, to finish the weekly objective. Because gold having printed the last week candle bearish, it means we can also expect another bearish candle this week, but just an anticipation. Remember, trading is just a probability game. You cannot be right every time, right? So you can buy gold to target the premium zone, then we sell, right? Now if you go to 3 hours, let us just go to 1 hour. Now if you go to 1 hour, you will find out that we have a higher probability order block here, which we can use for the reversal. Okay, we can use this for our reversal. We can use that for our reversal. But remember, if you are going to take the buy on gold, then your target should not be past this equilibrium. Even if you are going to target this POI, then at least take partial at the equilibrium zone, because gold normally react at the equilibrium. Not even gold, even currency pair react at the equilibrium zone. It can react there and start selling. So you be keen with your target. Now first target equilibrium, then you can target the PI. Now if we drop to 45 minutes time frame, if we drop to 45 minutes time frame, we can see another PI here, right? There is another PI here. So all these are our drawn liquidity for next week. Okay, so our first drawn liquidity is going to be the PDRA, which is the equilibrium zone. It is going to retrace up to the equilibrium and then sell off, or retrace to the POI. POI is also that is also liquidity, so it can also trade to the POI and then retrace. Now for now, we are going to find a way to take our buys. Well, we are going to find a way to buy gold to either of those zones. Okay, we are going to find a way to buy gold to either of those zones. Then again find a way to sell it off to the weekly. Now the weekly fair value gap. So that's my analysis. Now remember, it is not, anything can happen. Okay, anything can happen on the market now. So you don't be sure that gold is going to sell next week. It can go ahead and create another all-time high, because this is also our drawn liquidity. So if this PI fails to hold, then we are going to wait at it. We are going to trade continuation to the next PI. Now if that PI again fails, okay, then we are going to clear the ERL, and gold will continue giving us all-time highs as we continue trading gold. Okay, but remember, if the first PI fails, then we go for the second one. If the second one fails, then we can say our bias is wrong, because that's what I was told by my mentor. It means our bias will be wrong at that point. So what we will do at that point is we will continue trading continuation to clear the ERL as our final drawn liquidity. So you be keen, you trade the continuation. Gold is even fun, it cannot even trade into this equilibrium, it can even just drop from here. But when the week is going to open, you be keen, take a look at what gold is going to do. First manipulate and then distribute, blah blah blah. But make sure if you are buying, target the equilibrium. Then for your first target, I'm not saying it's going to reverse from there, but normally that one should be our first target, because at equilibrium the price is balanced. Now if the price is balanced, it means anything can happen from that point. It can, because if we were bearish on gold and it is at the equilibrium zone, it means it is between the premium and discount. It means once it crosses the equilibrium zone, it is on a premium zone. Now from there you can be ready to sell, because the price is already expensive at that point. Okay, now even if we were bullish, just like here, if you see from the 4-hour time frame, gold has been bullish, and then it traded to the discount zone. Now from the discount, the price is now cheap, you buy. Anytime it touches there, you can start looking for an opportunity to buy. No, buying at the premium is very risky. Okay, now as we are going to open for the new week, make sure you target the equilibrium, then target the first POI. Now if this first POI doesn't hold, then it means we are going for the second POI, which will also be our drawn liquidity. Now if that POI again fails, then we go for ERL. That is why this strategy is very, it's very sweet. You'll just love your losses. You love taking losses. Have you ever done that in trading? You will love taking your losses. You take a loss, but every loss has a lesson. Because, for example, if you are trying to sell from this POI, the first POI, and then it fails, when that POI fails, it means it will take you out from the sales. Then you will start looking for buys to the second POI. Now, if the second POI is again fails, which means you can lose at that point again, and then you will know that indeed our bias is wrong. So we can again try buying to clear the ERL. We can try buying to clear the ERL to create another all-time high. So you be keen with that. So not that it will be perfect, but that's what I'm anticipating on gold right now. So you just do your part. Okay, thank you.